When most people think about investing, they focus on one question: what should I invest in? Should you buy stocks or bonds? Index funds or ETFs? Domestic markets or international markets? Growth stocks or value stocks? But what if the most important question isn't what you invest in at all? What if the real key to long-term financial success is who you invest with? Welcome back. In today's video, we're exploring one of the most overlooked truths in investing. While markets rise and fall, trends come and go, and investment products constantly evolve, the people and institutions managing your money can have a greater impact on your financial future than almost any individual investment decision. Let's dive in. For decades, investors have been bombarded with promises of market-beating returns. Financial advertisements showcase impressive performance charts. Fund managers highlight their winning strategies. Social media influencers promote the latest investment opportunities. Yet history tells a different story. Research consistently shows that many investors underperform the very investments they own. The reason isn't always poor investment selection. Often, it's because of emotional decisions, bad timing, excessive trading, and working with advisors or institutions that prioritize sales over long-term wealth creation. This is where the importance of who you invest with becomes clear. A trusted investment partner does much more than simply select investments. They help you stay disciplined during market volatility. They guide you through economic uncertainty. They help prevent emotional mistakes that can damage long-term returns. Think about it this way. During a market crash, two investors might own exactly the same portfolio. One panics and sells everything near the bottom. The other remains invested and follows a long-term plan. 10 years later, their outcomes could be dramatically different. The portfolio wasn't the deciding factor. The guidance, discipline, and investment philosophy behind the portfolio made the difference. That's why choosing the right investment partner is so critical. Another reason who you invest with matters is alignment of interests. Not all financial institutions operate under the same incentives. Some generate revenue, primarily through commissions, transaction fees, or selling proprietary products. Others focus on long-term client success through transparent fee structures and evidence-based investing. As an investor, understanding these incentives is essential. The best investment relationships are built on trust, transparency, and a shared commitment to achieving your financial goals. When your advisor or investment manager succeeds only when you succeed, the relationship becomes far more powerful. This alignment encourages decisions that prioritize long-term wealth creation rather than short-term sales opportunities. And speaking of long-term wealth creation, let's talk about one of the most successful investment approaches ever developed: index investing. Index investing has transformed the investment industry because of its simplicity, diversification, and low cost. Rather than attempting to pick winning stocks, index funds aim to capture the performance of entire markets. Numerous studies have shown that low-cost index investing often outperforms many actively managed funds over long periods because lower fees leave more returns in investors' pockets. But even with index investing, the human element still matters. A low-cost portfolio is valuable. However, a low-cost portfolio managed with discipline, patience, and sound guidance is even more valuable. The best investment partners understand that successful investing is often less about predicting markets and more about managing behavior. They know that markets will experience periods of fear and euphoria. They know that headlines will create uncertainty. They know that investors will occasionally feel tempted to abandon their plans. Most importantly, they help clients stay focused on the bigger picture. Another factor that separates exceptional investment partners from average ones is their investment philosophy. Markets constantly evolve. Economic conditions change. New technologies emerge. Entire industries rise and fall. Yet successful investors often follow a consistent set of principles. They focus on diversification. They manage risk carefully. They avoid chasing performance. They think in decades rather than days. and they understand that patience is one of the most powerful forces in investing. In today's environment, diversification has become especially important. Many investors have concentrated heavily in a handful of popular companies and market sectors. While these investments have delivered strong returns in recent years, history reminds us that market leadership rarely remains the same forever. Some analysts now see opportunities emerging in international markets and underrepresented regions where valuations and earnings momentum may be improving. A strong investment partner helps investors build diversified portfolios that can adapt to changing market conditions rather than relying on a single theme or trend. This balanced approach can help reduce risk while positioning investors to benefit from opportunities across multiple asset classes and regions. Risk management is another area where the right investment relationship makes a tremendous difference. Many people assume investing is primarily about maximizing returns. In reality, successful investing is often about managing risk intelligently. Protecting capital during difficult periods can be just as important as generating gains during strong markets. Great investment managers understand this balance. They recognize that every investor has unique goals, time horizons, and risk tolerances. Rather than applying a one-size-fits-all approach, they create strategies tailored to individual circumstances. And, perhaps most importantly, they provide perspective. When markets become volatile, perspective becomes invaluable. Financial news thrives on drama. Headlines emphasize uncertainty. Predictions become increasingly extreme. But experienced investment professionals understand that volatility is a normal part of investing. Market declines have occurred throughout history. Economic recessions have come and gone. Geopolitical events have created uncertainty countless times before. Yet despite these challenges, long-term investors who remain disciplined have often been rewarded over time. That's why trust matters. That's why guidance matters. And that's why who you invest with matters so much. At the end of the day, investing is not simply about buying financial products. It's about building a partnership based on trust, transparency, discipline, and a shared commitment to your long-term financial success. So the next time you evaluate your investments, don't focus only on what you're investing in. Take a closer look at who is helping you make those decisions. Because while markets will always fluctuate, the quality of your investment partner can influence every decision you make along the way. And in the journey toward financial independence and long-term wealth, that may be the most important investment decision of all. If you found this video valuable, be sure to like, subscribe, and share it with someone who wants to become a smarter investor. And remember, successful investing isn't just about finding the right investments. It's about finding the right people to guide you through the process. Thanks for watching, and we'll see you in the next video.